Right now, shares of STRV Inc., ticker symbol ASST, are trading live at $1.39 5 pace per share. That's a sharp drop in the early morning session, down about 5.74% for the day, and it's trading on heavy volume that's already cleared 12.6 million shares. The stock opened up at $1.45, tried to hold, but has since fallen to a low of $1.37. Now, seeing that price just under $1.40, you might be tempted to just lump this in with 100 other volatile, speculative microcap stocks. And here's the hook, the piece of reality that I guarantee most of the market is missing this morning. The action in ASST, the common stock, isn't even the main story. The real headline, the one that completely reframes what this company is, just happened. Yesterday, STRV closed a $160 million initial public offering, not of its common stock, but of a brand new Series A perpetual preferred stock that trades under the ticker SATA. They didn't just raise that $160 million to pay salaries, they immediately used it to go on a buying spree, acquiring 1,567 Bitcoin at an average price of over $103,000. This is the expectation versus reality gap in its purest form. The expectation is that STRV is just the asset manager founded by Vivek Ramaswamy, known for its anti-ESG ETFs. The reality is that STRV Inc. is executing a rapid, aggressive pivot to become one of the world's largest publicly traded Bitcoin treasury companies, and it's using complex financial instruments to do it without immediately diluting its common shareholders. What we are watching is a complete transformation, and the market is still struggling to price what this company is today, let alone what it will be tomorrow. Let's stick with the common ground for a second. For most people who follow finance, the name STRV is tied to its subsidiary, STRV Asset Management. This is the firm that made waves by offering a suite of ETFs, funds like STRV, their S&P 500 equivalent, DRLL for energy, and SHOC for semiconductors. Their entire marketing pitch was built on a specific corporate governance philosophy, one that pushed back against what they saw as politically motivated agendas in corporate boardrooms. For many investors, using platforms like Robinhood or Fidelity, that's where the story began and ended. It was an asset manager with a particular viewpoint competing for assets under management, a story as old as Wall Street. And if you look at their asset management arm, it's been successful, gathering over $2 billion in assets. But if that's all you think is happening, you are looking in the rearview mirror. The company that exists today, the one whose common stock is ASST, is now a holding company with a stated mission to maximize the amount of Bitcoin per share held in its treasury. The ETF business is just one part of a much larger and far more volatile ambition. This isn't just a minor strategic shift. This is a complete corporate metamorphosis. The $160 million raised via the SATA preferred stock is a fascinating move. By issuing preferred shares, STRV is able to get a massive influx of non-dilutive capital for the ASST common stockholders. They're taking on debt-like obligations. The SATA shares pay a hefty 12% initial annual dividend to fund immediate, large-scale acquisitions of a highly volatile asset. This brings their total holdings to 7,525 Bitcoin. Think about that. This isn't like buying some NVIDIA stock or Apple stock for the corporate treasury. This is an all-in bet. This move fundamentally changes the risk profile of the company. It explains why the stock has an astronomical beta of over 17. That isn't a typo. It means the stock is theoretically 17 times more volatile than the broader market. It's a trader's dream and a traditional value investor's nightmare. This isn't a stock you park in your Fidelity IRA and check in on once a year. This is a stock you watch on your Interactive Brokers terminal by the minute because its value is now inextricably tied to the second-by-second ticks of the cryptocurrency markets. Let's look at the recent trading action in ASST itself because it tells a story of confusion and speculation. The stock has been on a wild ride ride with a 52-week range that stretches from 33 cents to over $13. Today's 5% drop is just noise against that backdrop. What we're seeing is the market trying to figure out the new math. How do you value a company that has a traditional asset management business but is also holding nearly $750 million worth of Bitcoin on its balance sheet? And it's not stopping. STRV is also in the middle of an all-stock acquisition of Semler Scientific, SMLR, another company that had previously announced its own Bitcoin treasury strategy. STRV is essentially rolling up other Bitcoin-focused public companies to consolidate their holdings. This is corporate empire building 2025 style. The volume we're seeing today, already in the millions of shares just an hour into the session, isn't institutional funds slowly building a position. This is fast-moving capital, traders on platforms like SoFi Invest and Robinhood, and hedge funds all trying to front-run the next crypto move and figure out the arbitrage between ASST, the new SATA preferreds, and the price of Bitcoin itself. So what does this company, STRV Inc., ASST, actually do now? Let's clarify the new structure. At the top, you have STRV Inc., the NASDAQ-listed holding company. Underneath it, you have two main pillars. First, the legacy and still significant STRV Asset Management LLC. This arm manages the ETFs, provides investment help, and competes with other investing sites and managers for capital from investors doing online investment. This business generates revenue from management fees. The second and increasingly dominant pillar is the corporate treasury, which is now a Bitcoin acquisition vehicle. The company's stated goal is to use its cash flows and capital raised from instruments like the SATA preferred stock to continuously buy and hold Bitcoin. The thesis is that by doing this, ASST common stock will become a superior proxy for Bitcoin itself, potentially outperforming the digital asset over the long run. This makes it a direct competitor to other Bitcoin proxy stocks, but with a far more aggressive and leveraged approach. It's a bold, high-stakes model that introduces massive new risks. If Bitcoin's price collapses, the value of their primary asset gets crushed, and they're still on the hook for those 12% dividend payments on the 160 million of SATA shares. This is the definition of a double-edged sword. Looking forward, the path for ASST is binary. There is no middle ground here. The future outlook is not about incremental earnings growth or market share in the ETF space. The future of ASST is now almost entirely dependent on the price of Bitcoin. That's the catalyst, and it's also the single greatest risk. If you believe Bitcoin is heading to $150,000 or $200,000, then STRV's strategy of using leverage, the preferred stock, to acquire Bitcoin now could be a masterstroke. The potential upside for the common stock, ASST, would be explosive as the value of their treasury would swell, dwarfing the company's current market cap. The management team would look like geniuses. For those looking at self-investing and wanting a high-risk, high-return way to play the crypto space through an individual brokerage account, ASST is putting itself forward as the ultimate vehicle. This is far more aggressive than just using a robo-advisor or Schwab Intelligent Portfolios, which are designed to manage risk. STRV is manufacturing risk in pursuit of outsized returns. But we have to talk about the other side of that coin. The reality is that this strategy is fraught with danger. The company is running with negative EBITDA, its revenue growth is impressive, but it's not yet profitable on a net income basis. Now, it has added a $160 million preferred stock layer that demands significant cash dividends. If the price of Bitcoin stagnates, or worse, enters a new bear market and falls 50%, their balance sheet will be decimated. The value of their primary asset would be cut in half, but their $160 million in preferred stock obligations would remain. This could create a death spiral for the common stock. This is why the stock is trading at $1.40 and not $14. The market is pricing in this extreme risk. The recent filing to register the resale of up to 1.28 billion shares of Class A common stock also hangs over the market, signaling the potential for massive future dilution even as they just use preferreds to avoid it in the short term. It seems they are building a war chest of every possible financing option. I want you to comment below with your thoughts on this strategy. Do you think using preferred stock to buy Bitcoin is a brilliant move, or is it reckless? Let me know what you think. So, as we watch ASST bounce violently off its intraday lows, the picture becomes much clearer. The expectation that this is just another small-cap asset manager is completely wrong. The reality is that STRV Inc. has transformed itself into a highly leveraged, hyper-volatile Bitcoin acquisition machine. The common stock, ASST, is a bet on not just the price of Bitcoin, but on management's ability to navigate this high-wire active financial engineering. They are juggling a traditional ETF business, a massive crypto treasury, a pending acquisition, and a new class of preferred stock. The $1.40 price tag you see on